You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome to the show, Eric.
Yeah, great to be back, Jim. Thanks for having me.
I know you're a guy who really likes to watch major cycles. How has this Chinese stock market meltdown fit into some of those cycles?
That has fit in remarkably well. Two of the primary longer-term cycles that I've been discussing in recent years, one of them is a 40-year cycle, another is a 17-year cycle. And one of the interesting things I kind of documented a few years ago was this 17-year cycle within China's history over the last couple hundred years, and their kind of slow rise to economic prominence. And it pinpointed 2014 to 2017 as the next phase of that cycle. And I thought there would be several things occurring during that period. One of them is kind of a bubble and crash in their market, which we have really seen over the last 12 to 14 months now. And I think there still is another shoe to drop there where the Shanghai Composite Index is concerned. So starting off 2016, it has been a very strong validation to that whole scenario, and has also fit with more intermediate indicators and cycles that I discussed back in the middle of 2015 that looked for the real trouble in global equity markets to take hold after mid-December of 2015. And that was kind of a refrain that I kept repeating throughout 2015, that I thought we would see an initial 15 to 20% drop in the middle of 2015, then a strong rebound at the end, but then after mid-December is when the real trouble would begin in global equities and geopolitically as well. So these first couple weeks of, or really the first week and the last couple of weeks, have really started to confirm that scenario.
Right, we're talking about Iran and Saudi Arabia facing off, and I wasn't aware of it until I did an interview a couple of days ago that the Yemeni people have fired at least four Scud missiles into Saudi Arabia. I wondered if it was going to become a real shooting war between Iran and Saudi Arabia, and that analyst said, well, essentially that has already started.
Yeah, I had been reading some of the same, and here again, where these longer-term cycles are concerned, I did a series of reports over the last couple of years, and I called them 2016 the Golden Year. And I had 3 or 4 primary conclusions in those reports, and those conclusions were based on a myriad of diverse analysis cycles, indicators, geopolitical movements. And so the conclusions were, number one, was that gold and silver would not see a sustained advance until 2016. So through 2014, 2015, all I was ever expecting was 1 to 2 month bounces. But cycles in gold told me 2016 was the year to watch. But there were also long-term geopolitical cycles in 2 key countries. One was Syria, and the other was Saudi Arabia, that I thought would enter a very volatile period, kind of a crescendo in 2016. So that has also been, as Syria has come to the forefront, particularly last year or so, and where ISIS is concerned, that has certainly set the stage for what I'm expecting in 2016. But even more so, I've been discussing that Saudi Arabia would be another one, and it wouldn't surprise me to see some sort of revolt or upheaval there. I'm not just talking about nation to nation, Yemen or Iran against Saudi Arabia, but I'm talking within the country as well. Would not surprise me at all to see a serious shift in that country. And I think I was just writing about this in my last newsletter that either consciously or unconsciously, Saudi Arabia has been lining up antagonists, or they've been the antagonist, with key groups and nations for the last couple of years, starting with Russia back in 2013 and 2014, and then with really them just kind of stepping back and allowing oil to plummet has really turned a lot of non-OPEC members against them. And then more recently, they did this whole thing a couple weeks ago where they came out and announced their 34-nation coalition against ISIS. And within a day or two, several members of that alleged coalition were coming out and saying, wait a minute, we didn't agree to any of this. Saudi Arabia's just kind of blowing smoke. And then when you talk about the confrontation with Iran over the execution of the terrorist in Saudi Arabia, it's just they're lining up their ducks in a row. The only problem is all those ducks are ones that want to see Saudi Arabia fall in one way or another. And the best thing you could happen for oil prices is some sort of upheaval or insecurity in the Middle East. And all of those oil producers know that. So it would not surprise me at all, and it would be a perfect fulfillment of a lot of this analysis I've been describing, to see 2016 be the year where real trouble lands on Saudi Arabia's doorstep.
Well, of course, Russia's a big backer of Iran, and Russia would just love to see higher oil prices because their economy's taking a real kicking because of low prices right now.
Absolutely. And when you read to the history over the last couple of years of the one prince in Saudi Arabia and some of his confrontations with Vladimir Putin and just a falling out over the last year or two, it does seem like something that's coming to a head, and that Putin and company would not be upset to see Saudi Arabia run into some trouble in the coming years. And like you said, their economy is suffering because of the low oil prices, and something needs to turn to keep them afloat. And it even lines up with discussions I've had on the Russian ruble, and where I thought early 2016 was setting up for a major low in their currency. So that may be a reflection of some fundamental shift that's going to happen throughout the year.
Well, it seems so many people have a stake in a war between Saudi Arabia and Iran. I mean, I think the Canadian Prime Minister may not even realize that he's playing into this geopolitical morass where, on one hand, Justin Trudeau has condemned the executions in Saudi Arabia, but he says Canada is not going to cancel its multi-billion-dollar arms contract with Saudi Arabia.
Well, yeah, and you think of all the different, even the fracking industry in the U.S. Would certainly like to see a big turnaround in oil prices. And so, you have a lot of different factors and different entities that probably wouldn't be too disappointed if Saudi Arabia runs into some problems and all of a sudden oil does an about-face.
Well, of course, Canada's currency has just taken a pounding because of low oil prices. It's now worth 70 cents U.S. Some people have predicted it could fall as far as 55 cents U.S. So why wouldn't we want to have some kind of a conflict? Of course, the problem with wars is they don't tend to just kind of stay in one place, right?
Right. There's all the unintended consequences that you can't control. And so although a lot of those entities might not do anything to foment that, they're also not too disappointed if it does occur. But like you said, you need to watch out for collateral damage and unintended consequences once that snowball starts rolling down the hill, you can't really control it.
Right, and of course, the conflict in Syria, nobody expected that we would see millions and millions of immigrants come out of that situation.
Right, you have the move or the attitudes toward Assad several years ago. It's even like the Arab Spring and everything else. In one respect, you kind of say, okay, you've got some of these dictators who have been pretty heinous towards a lot of their citizens for decades, but taking them out of the way often, creates a vacuum, and sometimes something worse fills that vacuum. And you just have seen this whole series of events over the last 10, 15 years that's continuing to grow steam. And like you said, it's no longer contained to just the Middle East. You've got Turkey and Greece and all of Europe now dealing with the immigrant crisis, and then the speculation that terrorists, ISIS, whomever, is utilizing that as cover to move around globally, and it just continues to go in directions that no one could have ever perceived.
Well, sure, the U.S. created ISIS because they knew they'd fight the Syrian government. They just didn't think that they would change direction and head east and south.
Yeah, you'd think sooner or later you'd learn from experiences, whether it was offering some support to that guy in the Afghani mountains when the Soviets invaded back in the early 80s, to siding with that Iraqi dictator against Iran in the early 80s. It seems to play out that way every time. You back one entity, and before you know it, they've turned against you.
Right, as we saw, the U.S. supported the Mujahideen, who later became the Taliban, and now the Taliban has become ISIS. When you give guns to people with radical ideas, they don't always do the things with those weapons you hope they would.
Right.
We'll have more with Eric Hadik right after the break.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Eric Hadik. Eric, what do the cycles tell us will happen with gold and silver this year?
Well, as I mentioned in the in the allusion to the 2016 Golden Year reports that I've done, I do think that this is going to be the time where gold and silver are able to see their first sustained advance, and I'm terming that as anything over 3 months in duration. But from a bigger scale, I think this will just be the first stage in a larger multi-year bull market. So it wouldn't surprise me to see an initial 3 to 6 month advance in gold, then a pullback probably later in 2016, and then that set the stage for a more prolonged and more dynamic advance in the years to follow. And there's a lot of reasons that I expect that, but even another key one that I think is going to play a role after 2016 has to do with the dollar and the dollar's reserve currency status, which I mention the cycles a lot, although there's a lot more goes into my analysis than just cycles. But they're one of the kind of general things that's easier to discuss on the surface and at least give some quick anecdotal evidence that's supporting my conclusions. But 2016 is the year when I think that the dollar, I think there still is more upside in the dollar index, but I think even as that's happening, you're seeing events taking hold behind the scenes that are slowly chipping away at the dollar's preeminence around the world and as a reserve currency. And I think that starting in 2017, that whole that's going to shift direction. And even going back to our discussion on China, you look at October 1st of 2016 is when the yuan will, for the first time, be incorporated in the IMF's SDR, special drawing rights, which is a pseudo currency, and I think the yuan starts out as close to 11% of the calculation of those SDRs. But all of that fits with the big picture scenario I've been discussing, that I thought in the second half of the 2010s we would see the dollar status as reserve currency around the world turn and start to head lower. And that will probably be a slow turn at first, like all topping formations. But then when it starts to grow steam, starts to kind of hit a tipping point, then there will be a mass exodus, and that's when you're going to see more dramatic moves, which gold and silver would most likely be one of those. And it just fits perfectly with some specific expectations I have for the next couple years.
Now, of course, if the Chinese economy collapses or at least really downturns a lot, what are the chances of the yuan finally replacing the U.S. dollar, or will the U.S. dollar still be king by default?
I think that the dollar is still going to be the one that that most financial institutions have the greatest faith in for a while. It will definitely take a combination of events and movement within cycles within the value of the dollar and other factors to begin to shift that. But I could see a couple different scenarios that that kind of surprised the markets. And it was interesting even when I made reference to the Saudi prince. Is it Bashar? Actually, I don't want to, since I don't have the name right in front of me, I don't want to misquote who it is, but he's been the real power broker in Saudi Arabia for many years. And when he went and visited Putin a year and a half or so ago, I think it was late 2014, there was talk of a kind of a big deal offered then, which was rejected by Putin, and then it was immediately after that that all of a sudden the price of oil started plummeting. So, you can do the math and figure out if that's just coincidence or something intentional. But, really the dollar has benefited since the mid-'70s by being backed by oil, basically. You had this whole scenario in the mid-'70s where first you had the Nixon gold shock, then you had the collapse of Bretton Woods, and then you had the oil weapon wielded against the U.S. In the Yom Kippur War, and then immediately after, Saudi Arabia is offering to price oil in dollars in exchange for U.S. Commitments to protect oil fields. And then by the mid-'70s, all of OPEC had agreed to price oil in dollars. And that has been one of the single biggest things to support the dollar in the 40 years since then. And, there's been a shifting where that's concerned too. So it doesn't have to be just the IMF and the special drawing rights currencies. It can be oil, it can be Saudi Arabia, it can be, the way the BRICS nations have been starting their own, the new development bank, and China with the Asian Infrastructure Bank. There are so many dominoes lined up that it's just going to take one of them starting to kind of pass that point of critical mass, and I think you'll see a domino effect of several of them, and then all of a sudden, that's when everyone's looking at the dollar and saying, it doesn't mean that the dollar disappears overnight or that suddenly everyone turns its back on it. It's just a shift in proportion and percentage, and it doesn't take much of a shift to start a different domino effect in the American economy, in debt, in everything that we talk about where the markets are concerned.
Mm-hmm. So it really looks like it's in the best interest of oil producers around the world to let the Saudis start kicking around and shooting.
From a purely oil price standpoint, I'm sure that would be the case, but as we said a few minutes ago, you never know the unintended consequences, you never know the collateral damage, what innocent bystanders are going to get hurt by that type of thing, and the markets don't like instability. So you may say that looking at the price of oil, but if you get some serious uncertainty in the Middle East and you get global equity markets suddenly going into a tailspin, you could see oil taking another plummet just because of demand. So it's never an easy, direct, 100% direct correlation that, if, things start really coming undone in Saudi Arabia, then you can plan on oil being higher. I mean, just look at an oil chart from mid-1990 through mid-1991. And, it looked like a bubble and crash in the price of crude. So I don't think it's as easy as just assuming that would be what saves oil.
Well, they assumed, like you said, that ISIS would just attack the Syrian government. That hasn't been the case, and the Mujahideen became the Taliban. So just be careful what you wish for, right?
Exactly. That's what I'm saying is, none of these things are under real control of the power brokers who think they have control, and usually comes back around to bite them.
Well, the boys in Langley, where they run the CIA, always believe that they're in control, but I think they've only been successful in getting one coup to go the way they wanted in the entire history of the CIA trying to manipulate history. That was Nicaragua back in 1955.
Oh, okay.
So their batting record's pretty poor, but that hasn't stopped them from trying.
Yeah, and that's an area that I don't have enough knowledge about to really speculate intelligently, but just watching the markets and watching the things that are lining up, it wouldn't surprise me to see more of that type of manipulation going on behind the scenes, even if it's not directly from the U.S. I mean, when we talk about Saudi Arabia, what are the odds that some of Iran's surrogates or even Russia's surrogates might, start things escalating within Saudi Arabia?
Well, sure. I mean, everybody's got spy agencies. Even Canada. The president of Brazil refused to visit Canada because it had been found out Canada's spy agency had been manipulating mining stocks in Brazil and had been bugging their offices. Everybody's up to it.
Yes.
Even us little Canucks. Eric, thank you very much for chatting with us.
It's been great being here again, Jim. Thanks very much for having me.
My guest has been Eric Hadik, president of InsideTrack.com, Inside spelt INSIIDE. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward questions or comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.